Yeah, I mean, it's worth separating the two stories, I think, Shauna, because when you think about what's happening with the Model X, that price cut was made to come within the cap of the IRA. This makes the car eligible for federal subsidies, making it more affordable, although it's still higher than the Model 3 and the Model Y. This is largely seen as the big motivation behind the cuts there. The Model 3, though, is probably a bigger concern when you consider that the Model 3 and Model Y make up such a big chunk of Tesla's revenue and deliveries. A lot of investors were expecting the new Model 3 to be at a lower price point to compete with BYD and other cars, especially in China, where the competition has been steep. There have been quite a lot of interesting news about Tesla recently, and we believe that more is still to come. Tesla's track record of exceeding expectations and turning profits has built investor confidence in the company's ability to execute its vision for the future. These are not just speculations, but facts based on actual evidence, with numbers backing it all up from the leading automaker. As we continue with this video, we're going to explore some of the latest Tesla news and how this is all going to impact Tesla stock in the long term. Let's get started. Speaking of travel, let's check in on some of the EV makers. Tesla shares are trading higher today after data from the Chinese Passenger Car Association showed that Tesla sold over 84,000 EVs in China in August. That marks a 9.3% increase from a year ago. Sales of Tesla's China-made Model 3 and Model Y cars rose over 30% from a month earlier. This is good news for Tesla, especially considering the competition in China that's leading to the pricing wars across the sector. Last week, Tesla once again cut prices for its Model S and Model X in both the US and China. We'll see how that impacts demand and margins moving forward, but so far, it seems to be good. The sentiment here, at least more broadly from the street, has been that they're willing to sacrifice some margin pressure in the short term to gain market share. This is crucial for Tesla, not only in China, but also in the US. Looking at recent sales numbers, Li Auto, a huge domestic competitor in China, delivered nearly 35,000 cars in August, up 663%. Tesla has been trimming its car prices since the start of the year, which impacted its quarterly margins and heightened investors' fears. However, many fail to understand that Tesla's strategy of price cuts is aimed at boosting demand to support production levels. Moreover, the price cuts don't hurt the bottom line as badly as some on Wall Street have feared. Contrary to what others think, Tesla's profit margin is actually in pretty good condition. Hey guys, welcome back to Tesla Tomorrow. There's no question that Tesla has advantages or tools at its disposal that new and even legacy automakers don't have. For instance, Tesla is the only pure-play EV manufacturer that is profitable on a predictable basis, as determined by generally accepted accounting principles, GAAP. Tesla has a chance to deliver its fourth consecutive year of GAAP profits in 2023. On the other hand, most legacy automakers that appear to be profitable have EV divisions decisively losing money and burning cash. If Tesla continues to manufacture or sell cars, these price cuts will have little or no significant effect on the company in the long run. If you like this type of content, make sure to hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Production is already in top gear at Tesla's Gigafactories. For instance, the company's Giga Shanghai plant just hit the 2 million cars mark. Tesla Giga Shanghai went into operation in late 2019 after unprecedentedly quick construction, which started on January 7, 2019. Initially, the production concerned only the Model 3, but towards the end of 2020 and early 2021, the Model Y entered production and sales. The factory produced the first million electric cars in August 2022 within 33 months, and now the second million units have been achieved in just 13 months. Currently, Tesla's cumulative production is about 5 million units, meaning the Shanghai factory is responsible for 2/5 of all Teslas available today. This Chinese factory was initially focused on the local market, but later it became Tesla's main export hub, supporting surrounding markets as well as Europe and recently Canada. It is the world's largest all-electric production site, with an installed manufacturing capacity believed to be above 1 million units annually. Tesla describes the plant's capacity at over 750,000 units annually, even though the data clearly shows significantly more activity. For instance, more than 935,000 units have been sold locally or exported over the past 12 months. It's also worth noting that Tesla was the first foreign car maker allowed to open a wholly owned manufacturing site in China instead of a 50-50 joint venture. This is something the market is largely ignoring. Another thing the market is dismissing is the potential for Tesla to license its FSD software to other EV makers. In other words, Tesla's current competitors may become the company's partners. Already, Tesla's superchargers have essentially become the North American standard. Tesla even announced charging deals with companies like GM, Rivian, Volvo, Polestar, Ford, and Honda. Honda recently announced that it's adopting Tesla's electric vehicle charging connector for its future vehicles, joining all the holdouts to accept Tesla's winning standard. The auto company plans to implement Tesla's plug, now known as the North American Charging Standard, NACS, into all its vehicles slated for 2025. Like other manufacturers on board with NACS, it's also promising the availability of a CCS combo to an NACS adapter before 2025, so its existing models and soon-to-be released ones will have access to Tesla's vast and reliable charging network. These days, DC charging and fast charging networks that aren't built by Tesla are found to be largely unreliable. So, with access to Tesla's supercharger plus building a new network, future Honda EV owners might have a better experience whenever the automaker gets around to releasing the vehicles. Tesla's supercharging effort doesn't stop at just opening its network up to other EVs, it also extends to making more charging stations available globally. For instance, the automaker plans to install 20,000 electric vehicle charging stations across 2,000 Hilton properties in the US, Mexico, and Canada beginning next year. For Tesla, building out wall connectors is one significant way to increase mass adoption, as it will help to offer more convenient charging stations. More people are starting to recognize Tesla's efforts towards sustainability and autonomy. A recent Wall Street Journal report claimed that Tesla is building out charging stations cheaper and faster than any of its competition. Its speed and cost advantages have helped it win millions of dollars in federal grants and establish a key infrastructure advantage as electric vehicles go mainstream. Think about it. 3 out of 5 fast chargers in the United States are in Tesla's network. This shows the company has a significant head start in the race, which could help solidify its advantage in the growing EV market. Another projection from Piper Sandler stated that Tesla could bring in $885 million in supercharger revenue next year and $10 billion annually in a decade. This exponential increase in Tesla's market cap and revenue will drive the stock price in the future. There is proof of this. Tesla shares have more than doubled this year, as investors have responded favorably to its decision to open up its supercharger network to EVs made by other companies, as well as its strategy of cutting and sacrificing some profits in pursuit of market share gains. Therefore, with further gains from superchargers, Tesla's stock price can respond even more positively than it already has. Tesla continues to deliver strong growth as EVs take market share from traditional combustion vehicles. While high expectations are still priced into the electric vehicle stock, Tesla's sales update and reports on its superchargers both show that Tesla still has a long growth runway ahead. What do you think? Let us know down below and tell us your valuation of Tesla. If you want to know more about what Tesla's been up to over the last few days, click on the next video on your screen. See you there.